Hello, welcome to my channel. Today I will introduce one of the most influential books in the world of stock trading, How to Make Money in Stocks by William O'Neill. If you're looking to become a successful investor, then this book is a must-read. How to Make Money in Stocks is a classic investment book by William O'Neill, founder of Investors Business Daily, IBD, a popular financial news and research publication. First published in 1988, the book has been updated several times over the years to reflect changes in the market and to incorporate new technologies and techniques. The book is aimed at individual investors who want to learn how to identify and profit from winning stocks. O'Neill's approach is based on the premise that the stock market is not random, but rather follows certain patterns and trends that can be studied and analyzed. By learning how to recognize these patterns and trends, investors can increase their chances of success. O'Neill's system is called CANSLM, which stands for C. Current earnings. A. Annual earnings growth. N. New products, new management, and new highs. S. Supply and demand. L. Leader or laggard. I. Institutional sponsorship. M. Market direction. Each of these factors plays a key role in determining the success of a stock. In the following sections, we will explore each of these factors in more detail. Current earnings. The first factor in the CANSLM system is current earnings. O'Neill believes that a company's earnings are the most important factor in determining the value of its stock. Investors should look for companies that are experiencing strong earnings growth and are beating Wall Street's earnings estimates. To identify stocks with strong earnings growth, O'Neill recommends using a tool called the Relative Strength (RS) rating. The RS rating measures a stock's performance relative to the rest of the market. Stocks with high RS ratings are typically outperforming the market and are more likely to continue to do so. Annual earnings growth. The second factor in the CANSLM system is annual earnings growth. In addition to current earnings, investors should look for companies that have a history of strong earnings growth over the past few years. This can be an indication of a company's long-term potential for growth and profitability. To identify stocks with strong annual earnings growth, O'Neill recommends using a tool called the EPS earnings per share rating. The EPS rating measures a company's earnings growth rate over the past 3 years and compares it to other companies in the same industry. New products, new management, and new highs. The third factor in the CANSLM system is new products, new management, and new highs. O'Neill believes that companies that are introducing new products or services, have new management, or are reaching new highs in their stock price are more likely to be successful in the long term. To identify stocks with these characteristics, O'Neill recommends using a tool called the New Highs List. The New Highs List tracks stocks that are reaching new 52-week highs in their stock price. Companies on this list are often experiencing positive momentum and may have more room for growth. Supply and demand. The fourth factor in the CANSLM system is supply and demand. O'Neill believes that a stock's price is determined by the balance between supply, the number of shares available for sale, and demand, the number of investors who want to buy the stock. Stocks with strong demand and limited supply are more likely to see their price increase. To identify stocks with strong demand, O'Neill recommends using a tool called the Accumulation/Distribution rating. This rating measures the amount of buying and selling pressure on a stock over time. Stocks with high accumulation/distribution ratings are typically experiencing strong demand from investors. Leader or laggard. The fifth factor in the CANSLM system is leader or laggard. O'Neill believes that investors should focus on stocks that are leaders in their industry or sector, rather than laggards. Leaders are companies that are setting the pace in their industry and are more likely to outperform their peers. To identify leaders, O'Neill recommends using a tool called the Relative Price Strength (RS) line. This line measures a stock's performance relative to the S&P 500 index. Stocks with high RS lines are typically outperforming the market and are more likely to continue to do so. Institutional sponsorship. The sixth factor in the CANSLM system is institutional sponsorship. O'Neill believes that stocks with high levels of institutional ownership, such as mutual funds and pension funds, are more likely to see their price increase. This is because these institutional investors have a significant amount of capital to invest and can move the market with their buying or selling decisions. To identify stocks with high levels of institutional sponsorship, O'Neill recommends using a tool called the Institutional Sponsorship Percentage. This measures the percentage of a company's outstanding shares that are owned by institutional investors. Market direction. The final factor in the Canslem system is market direction. O'Neill believes that the overall direction of the market can have a significant impact on individual stocks. In a bull market, most stocks are likely to increase in price, while in a bear market, most stocks are likely to decrease in price. To determine the direction of the market, O'Neill recommends using a tool called the Market Pulse. This tool tracks the overall trend of the market, using a combination of technical and fundamental analysis. Conclusion. In summary, How to Make Money in Stocks by William O'Neill offers a comprehensive system for identifying and investing in winning stocks. The Canslem system is based on 7 key factors, including current earnings, annual earnings growth, new products and management, supply and demand, leader or laggard, institutional sponsorship, and market direction. By using these tools and techniques, investors can increase their chances of success in the stock market. However, it is important to remember that investing always involves risk, and there is no guarantee of profits. As O'Neill himself notes, the stock market is not a Las Vegas casino. It is a market of stocks, which means there are good stocks and bad stocks, and it is up to you to distinguish between the two. Thanks for listening. If you like this book, please hit the link in the description to purchase it. If you like my content, please consider subscribing to the channel. Please put your comments to let me know your favorite investing books and which I should cover next. See you next time.